Innovation in the investment industry is a hot topic, thanks to the rise of things like AI, shifting investor demand, and volatile markets that are requiring more agility from investors. Today, we'll be exploring the innovations driving both the ETF market and index investing more broadly, examining the latest trends and challenges facing investors and how technology is playing a role in shaping these products.
The ETF industry has been innovating nonstop for the past 30 years. A lot of that, I think, has been propelled by technology as an enabler.
Welcome to The Bid, where we break down what's happening in the markets and explore the forces changing the economy and finance. I'm Oscar Polito. Joining me live in London at our annual UK Wealth Investors Forum is Manuela Sperandeo, Head of Product for iShares in EMEA, and Stuart Doole, Global Head of Equity Investing Research at MSCI, an investment research firm that provides stock indexes, portfolio risk, and performance analytics. Manuela and Stuart, thank you so much for joining us on The Bid.
Hi, Oscar. Great to be here.
Hi, Oscar. Nice to be here.
Manuela, I'd love to start with you. The ETF market is no secret, it's a growing market. It is a topic of an investment vehicle of choice that people are using around the world. What are you seeing in terms of some of the trends that are really driving the ETF market?
Innovation and really the phenomenal growth that has characterized the ETF industry, I think have really defined this, in my mind, as one of the really most exciting development in the asset management industry. And again, I think in the context of what has been driving a lot of this growth, there are quite a few phenomena, which I think we can group across two big areas. The first one is the vast and rapid change in the way really these wealth distribution models have evolved, really the way investors consume financial products, and really the benefit that the ease and convenience of the ETF wrapper has brought to this trend. And just a couple of examples. We are here in London. If I think about the way the broader European market has been developing in the wealth segment, the rise of fee-based advisory and really the centralization of asset allocation models that very much lend themselves to really building blocks such as ETF. Clearly, the rise of digital investor, a lot of these propositions are built around ETF, phenomenal growth propelling that. The second key area that has been driving a lot of the growth in ETF, in my mind, speaks more to the broader financial ecosystem. For example, fixed income ETF as the modernizing force of fixed income market, really the way they have provided more convenient, more efficient access to the bond market. So the dual forces, one that really speaks to the consumer preference, and the second one that I think speaks more to the way ETF have really catalyzed transformation in financial markets. If I look at the state of play, we have crossed 11 trillion in assets. It's more than double since 2018. It's really phenomenal. And again, a lot of that I think also speaks to the way ETF have been innovating, not only as a product, but a broader financial ecosystem.
Right. And you mentioned fixed income ETFs. I think ETFs historically have been a way to get access to the equity market, but the fixed income market now is increasingly another asset class that you can access through ETFs. So what are some of those other innovations that you see going on within the ETF industry?
The ETF industry has been innovating nonstop for the past 30 years. A lot of that, I think, has been propelled by technology as an enabler of this innovation. What I mean by that is advances in data, analytics that have meant our ability to build better indices. But now we are at a tipping point where the ETF technology is opening up a whole set of opportunity even beyond indexing. So let me give you just a couple of examples. A huge topic for us today is around active ETF. And so the ability now to really capture a more active portfolio construction and investment strategy into the ETF wrapper. The second point I would make, I think, speaks about the ability of ETFs to get really granular and precise in the exposure. And again, powering a more nimble and agile asset allocation. And so in this context, I think about the better data that we have to map companies' exposure to trends such as AI, again, a very important theme that a lot of investors increasingly ask us to get exposed to, and being able to standardize exposure to new segments, for example, of the fixed income market, as I think investors increasingly want to slice their exposure to various segments of the fixed income market. So I think these are some of the trends that are really quite prevalent at the moment.
And you said active ETFs before, which I think are two words side by side that people didn't necessarily put them together. ETFs have been more synonymous with index investing. And so, Stuart, perhaps a good time to bring you into the conversation, because MSCI plays a key role in the creation of those indexes that ETFs have historically tracked. So talk a little bit about the innovation that you're seeing with respect to ETFs and maybe just the index investing ecosystem.
Absolutely. Obviously, you're right. Indexes underlie lots and lots of ETFs. Actually, at MSCI, the biggest slug of our clients are active managers. And a lot of the innovation we've seen in indexes, say over the last 10 years, has related to the underlying of an ETF, but also in benchmarks, in bespoke selection universes for active managers, as a second clock for an active manager who wants to see who's got the greatest skill in-house. And I think over that horizon, and I joined MSCI around 10 years ago, the biggest contribution to the growth of indexes in the investor space has been moving from a world where you could easily get exposure to a big region or the USA, emerging markets, and index providers supported by data and analytics have suddenly been able to match and help represent investment strategies that clients are interested in. And that can span factors and styles and themes and things related to, say, climate or sustainability. And so the way that we've taken regions and split them into countries and sectors really enables that asset allocation process and the model portfolio process, which has been another big driver of demand for these indexes.
Some of what you're discussing also ties back to something Manuela said about more precision exposure, taking regional exposures and breaking it down into countries is perhaps one example of that. You mentioned data and analytics. What role does technology play in the innovation that you're seeing in ETFs? We spend a lot of time on the bid talking about things like artificial intelligence. Does that have relevance also to the ETF industry?
I think for MSCI and for a lot of players in the ecosystem, the explosion of interest in and around generative AI has been a catalyst to reevaluate what they're doing, and it provides in these tools a way to create a test of a new way to automate a process or provide a better service to a client in a way that's very quick. You can get feedback really quickly and you can make decisions quickly. So it really moves along innovation in the business. More generally for index providers like MSCI, there's a big value from AI, whether it's the generative AI or other aspects of machine learning or natural language processing, with related to data extraction and QC. And so that can be in the sort of traditional fundamental data space, or it can be related to new exposures, more precise exposures that need us to crawl over filings and new services and things like that. Or it can be about processing completely new data that was very unfamiliar 10 years ago to indexes. It is a sort of a very nice, I think, circularity that goes on with the technology, in that the very technology that investors are interested in gaining exposure to is also the way that we're enabled to actually provide it to them. Without these advances in technology and AI and NLP, we wouldn't be able to build these exposures in any scalable way for them.
So the construction of the indexes is getting perhaps more intelligent, more enabled by technology. You also mentioned that active managers are the primary users of a lot of these indexes. Manuela, you started talking a little bit about active ETFs, which is sort of a newer space, I think, in the ETF industry, and that this is one of the areas where you see some of the innovation. Maybe you can expand a little bit more on that topic.
And yeah, you're right. I think historically, we were not used to be thinking about these two terms together. The rise of active ETF really speaks about the confluence that we're seeing about these universes, and really ETF rising as one of the wrapper of choice to access different investment styles beyond indexing. The term itself captures different options. We tend to distinguish across three key categories. The first one would be active management in the more traditional sense, sense. So this would speak to the alpha-seeking strategies. And I'll give you a few examples. The way investors are really looking to implement their asset allocation framework, for example, by taking small active risk away from the benchmark. This is quite relevant in the context of these models where investors are really looking at getting a little bit more beyond their traditional strategic asset allocation. Or the ability to also get exposure to diversified sources of return across sectors, across markets, even equity-style factors. And again, these, our research demonstrates, can be truly additive in the context of portfolio construction. So that's the first category. If I think about the second category, these are the more outcome-oriented active ETF. Income is evergreen in terms of investors' need in the context of retirement. And I think the structural innovation that active ETF bring is really around having a broader set of tools in the context of derivatives to be able to extract more income, and also the ability to limit your exposure to market correction. So this is the second big category. And then I think the third one, I think that's where the more traditional ETF investors, they can really recognize the benefit of an active portfolio construction to get exposure to segments of the market which historically were hard to reach via standard index. So I'm thinking about a segment of the market where the data are very nascent, the size of the underlying market, or maybe new frontier markets. I think it's very much where the dynamism of active management can be truly additive.
So just listening to the two of you, we've talked about the assets in ETFs are now north of 11 trillion. It's obviously a growing space. The way in which indexes are being constructed is evolving and is being enabled by technology. And Manuela, you're talking about now different strategies, more active approaches that are just even within the ETF. So it all seems to be working pretty well. But presumably, there must be some challenges or headwinds in the industry. It feels like any industry is always going to have something that's not working. What are those things?
Clearly, it's been a high growth segment, but in the context of the broader financial markets, it is still a smaller percentage, which is why we always talk about the incredible tailwind behind ETF adoption. But you're right, the number of product launches, the choice that investors are presented with could really pose the risk of product saturation. And I really think it's incumbent on us as an industry to really provide the level of clarity when it comes to really helping investors navigate the breadth of choice. But also the ETF ecosystem has been predicated on very robust trading and liquidity ecosystem. So again, I think every time we think about innovation, for us is very much around thinking of maintaining the product integrity when it comes to not only the construction, but ultimately the way these products trade. So this is paramount as we think about the growth and the innovation in this space.
And Stuart, we alluded to the fact that ETFs historically have been more associated with investing in indexes. So you've had a longer time period to evaluate how consumers use ETFs and how they consume these indexes in their portfolios. So what changes in investor demand or client preference have you seen that are now entering this space?
I think there are three dimensions to it. One, around the growth of the user base who use indexed ETFs. Second, around the nature of the indexes we build. And then third, around like the transparency that people are now demanding. In terms of the kind of investors, some of the things we've talked about in terms of how indexes have changed and the granularity of the exposures. But it's also about the fact that a lot of index provider tools have generally become a bit more self-service. The data is easier to access for end clients. And that really is enabling a lot more uptake in the retail and wealth space. So that's like an entirely new category really for the widespread use of index ETFs and the rise of model portfolios. In terms of the nature of the indexes, people are looking for more differentiation. How do they make their products stand out in what can be quite a busy marketplace? I think linked to that, but also linked to how it's now a very major industry, is that there's a demand from clients for intentionality. There's a lot more demand for a lot more upfront analysis, and there's much less trust in what the simulation might have done. And I think that reflects both better risk processes at product providers, but also probably reflects the rather perhaps more noisy world we live in currently than perhaps 5 to 10 years ago. And then finally, on the transparency side, clients are much, much more demanding about, are you using the right data at the right time? Are you following the rules exactly as you said you would? Because that's the essence of what we're providing. And it's not just as you might think, oh, it's the regulators bringing in rules, we have to all put out certain numbers. It's really also a distribution and sales thing. People, I think, are used to knowing what's under the hood now through the way the technology is developed, and they're demanding of it from all the services that they get.
Stuart, you've had a front row seat to the innovation in the ETF industry for a while. Take us forward 5 or 10 years. How do you see the ETF industry evolving? What changes do you see in how they will be used within portfolios? You've alluded to a few of these things now, but if you were to prognosticate even a little bit more, where are we going?
From an index perspective, we're part of that ecosystem. I just think the use of indexes as one of the ways that people enter into new asset classes or opportunities, say within digital, indexes have been very much part of that story alongside active strategies and as benchmarks as well. So no one thinks about getting into a new asset class or investment opportunity without indexes being part of the story. And I think that will continue. There's also generally a sense in which we will be more embedded into client systems. That could be a pension fund bringing things in-house, or within the wealth space where they need to blend it with personal financial data. The other area where I think you'll see greater indexation and the use of indexes is within private assets. Historically, there have been products out there, but I think it's an area of much greater interest. It's getting opened up to wealth and retail. And as a natural function of that, you're going to see a lot more indexes that give a lot more insight and rigor to that space.
And Manuela, what about you? If you take us forward 5 or 10 years, what do you see?
So if I take out my crystal ball, I can tell you that one of the vectors is absolutely what Stuart alluded to. If I think about the history of ETFs so far, this notion of establishing standards, which is going to expand to other asset classes, segment of the market, which are not indexized today. What is really going to happen is there's going to be greater standardization in the way you compute returns. And so once that is codified, clearly there are going to be indices built on that. And clearly there's going to be greater access provided by ETF. I think this is going to be standardization of calculation. There's going to be standardization of access. We've seen clearly increasing demand for digital asset. I would say this is only the beginning. Every time we do see standardization also from an access perspective, we know that the ETF technology can unlock rapid growth and greater democratization. And then lastly, the other big vector is around the use case, is around the next millions of investors who are going to become ETF investors. I myself remember when I actually bought my first ETF and the magic that it was in the way I was able to access financial markets. And I see that really expanding in the way, again, ETF are really becoming the wrapper of choice for these new distribution models.
Well, we definitely talk about ETFs on The Bid, and we definitely talk about technology and innovation. We often have two guests at the same time as well. What we don't often do is record an episode in front of a live audience like we did today. So thank you to both of you for sharing your insights on ETFs and where we're going. And thank you for joining us on The Bid.
Thank you.
Thank you, Oscar.
Thanks for listening to this episode of The Bid. If you've enjoyed this episode, remember to subscribe to The Bid wherever you get your podcasts.
Investors in the US should visit iShares.com to view a prospectus, which includes investment objectives, risks, fees, expenses, and other information you should read and consider carefully before investing. Investing involves risk, including possible loss of principal. Actively managed funds do not seek to replicate the performance of a specified index, may have higher portfolio turnover, and may charge higher fees than index funds due to increased trading and research expenses. The iShares ETFs that are registered with the US Securities Securities and Exchange Commission, are distributed in the US by BlackRock Investments, LLC. This material does not constitute an offer or solicitation to sell or a solicitation of an offer to buy any shares of any fund, nor shall any such shares be offered or sold to any person in any jurisdiction in which an offer, solicitation, purchase or sale will be unlawful under the securities law of that jurisdiction. BlackRock is not affiliated with MSCI. This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.